Thanks much. Welcome to the Freight Tech Venture Virtual Summit keynote with Karen Jones, the Executive Vice President, Chief Marketing Officer, and Head of Product Innovation for Ryder System. Karen, thanks very much for doing this. I'm really looking forward to our conversation.
Thanks, George. Glad to be here.
So many of you already know this, but let me do a little level setting about Karen. Karen's been working in the marketing industry for more than 30 years. She joined Ryder System. And note that I said system, not systems, Karen. I know what I'm doing here. Ryder System, Inc. Everybody, I think, realizes that's almost a $9 billion supply chain, dedicated transportation, commercial fleet management solutions company. Karen joined in 2013. In her role as Chief Marketing Officer, she's responsible for all marketing and new product developments across Ryder's various business segments that lead to revenue generation and enhanced, better customer experiences. But why is Karen with us today? That's the exciting part about what we're going to talk about. She's going to talk about Ryder's new corporate venture capital fund, Ryder Ventures. Ryder Ventures plans to invest $50 million over the next 5 years in startup companies that are tackling disruptions in the supply chain and trying to drive accelerated demand for e-commerce fulfillment, asset sharing, next generation vehicles, automation, data analytics, among others. This is really exciting stuff. This is what the Virtual Venture Summit is really all about. So, Karen, let's get right into it. You hear a lot about startup companies and venture capital firms investing in technology solutions to solve some of the disruptions that I was just describing in the logistics industry, but you don't hear very often about corporate or companies like Ryder getting into the funding game. Why did Ryder decide to make such a bold move?
Yeah, great question, George. Maybe I should just give a little bit of background as to how we kind of evolved to this position. But about 4 years ago, our CEO and our board of directors really gave us a charge or a mandate, if you will, to really start to understand from an external perspective what the disruptions were that were going to be really impacting and hitting our industry. And I think a really, really smart move from their perspective. And so they sent us sort of on a mission to look at what was really happening out there and what could be the single biggest threats and opportunities for our company as we move forward. So long story short, we looked at a lot of different technologies, a lot of different things that were happening out in the real world, and we narrowed down 4 focuses. And you mentioned those. One was in the area of e-commerce. The other is in the area of asset sharing, so sharing trucks as well as capacity. The other one was in next generation vehicle technology, and that includes everything from electric vehicles to autonomous vehicles. And then clearly big data and analytics is kind of a category, but more specifically addressing the data and analytics challenges in our business and sort of the digitization of the supply chain. So as we set out on that journey, it was really kind of interesting. We ended up creating and building a lot of products on our own. But part of that journey was really in partnering with a couple of incubators and accelerators to help us understand what was out there and what the possible disruptions were. We spent a couple of years working with Plug and Play and then also Autotech Ventures. And I could talk a little bit more in a little bit about that, but really great experience. And, fast forward to now, we believed it was the right time for us to start making deeper investments directly with some of these startup technologies. So that's the course we've been on.
That's really cool. And from what you've described, it sounds like there's more than just a monetary commitment that Ryder is making inside of Ryder Ventures. Am I feeling that correctly? Does it seem? Am I gauging that right?
Yeah, absolutely. I think monetary is always important, especially if you're a publicly traded company. It's always good to be thinking about that. But really and truly, I think what we saw as we started to work with some of the folks in Silicon Valley, part of the reason startup companies were really attracted to Ryder is that we have over 50,000 customers, right? We play in the fleet management, dedicated and supply chain business. So we had real world, what I would call laboratory uh, abilities to really match their technology with. So they're really great at technology. We're really great at the operations and having customers. And so bringing the two of those things together is really a great recipe. A lot of startups have great ideas, but they have no way to prove those ideas out, vet them, put them into real world applications. And so I think bringing together what we bring plus what startup technology companies bring is a recipe for success. So clearly, monetary is important to us. We hope to make bets on some very good and strong companies that make it. But equally as important is just understanding what's out there, what could potentially enhance our customers' experience, which is really the key ingredient for this. And what we need to be doing to really stay relevant and fresh to the market with what we're offering.
That relevance and freshness, I think, is really a significant part of this, and it's a wonderful part of the story for Ryder to be making these kinds of investments. You mentioned that you've been active in the startup community, the incubators, relationships with people like Plug and Play. Tell us a little bit about how some of those partnerships and how those partnerships and what role Ryder Ventures may play within that.
Yeah, great question there. I think we learned many, many invaluable lessons from having those partnerships with Plug and Play and with Autotech. Plug and Play, when you think about those two particular ventures, they have access to global technologies that are being developed. Ryder is a North American company. We don't have broad reach into the rest of the world. And, even though people may not like to hear it, there's a lot of great technology being evolved and developed outside the U.S. So I think working with them early on really gave us tentacles, if you will, into more global technology solutions that were happening. We also learned a lot about how to evaluate startups in our partnership with these companies. What do they look for? What signifies a possible investment for them? So I would say for the last 3 years, we really have learned a lot through our relationships and partnerships with them. Clearly, we're going to keep those relationships and partnerships as they've been invaluable to us. I think opening the aperture to have companies come directly to us is great. But not everyone will always go to Ryder first. And I think, our partnerships with these folks in Silicon Valley, it's been invaluable, and they have massive global reach. And so we'll continue to work all of these angles to find those right technologies and startups that we really want to invest in. So
as the time has already gone, you talk about, multiple years as you've been on this journey, have any products or solutions been manifested and been launched out into the marketplace at this point, or are we still in the incubation phase?
Yeah, we actually have had some really good successes at Ryder. A lot of it, products that we started internally. I'll talk a little bit about that. And then, thinking about the digitization of the supply chain, we announced a product this past year in May, actually in the midst of COVID, for our visibility and collaboration technology and solution for our supply chain group. We partnered with then a startup company, again, coming out of California, called Turvo, and really built a strong platform together that is really changing our industry, quite candidly. I think a lot of people claimed visibility for many, many years, and some people still do. But I think what's quite different about ours is that it combines visibility, the ability to then collaborate real time to make adjustments on the fly to your supply chain and what's happening in it real time. It's been instrumental in helping us sell a lot of new business this year, which we are really excited about. So we're off to the races on that, seeing great performance. We already have over 2 million shipments by the end of the year that will have gone through that platform. So it's no small venture. It really is paying off in spades with brand new business and revenue generation to the company. So we're very excited about that and where that product is headed. We also developed on that asset sharing front our own really kind of startup within a big company, which can be very difficult sometimes to do. But we created an asset sharing platform called Coop, COOP, stands for co-op. But basically, we got to a point where we said, hey, if we woke up one day and no one needed to rent a truck from Ryder anymore because they could rent trucks from each other, what would that look like to our business? What would that do to our business model? And what do we need to be doing to really take advantage of that trend of like the Airbnb, not owning assets, but being able to share assets? So we successfully launched a platform, opened up in Atlanta, Georgia 2 years ago. And that thing has really taken off. We're now in 6 markets, another 8 markets next year. On the plan, and we're seeing phenomenal results. It's interesting because there's so much capacity in the market, but it's very seasonal. Think about the seasonality of the industry, and so we're finding that some customers who really have too much capacity, and then there are those customers who are really, off the charts with what they have to do, are finding synergies and being able to rent those assets from each other. It covers payments, lease payments. If you've got trucks sitting idle against the fence and you're not using them, it makes all the sense in the world to put these products on the platform, rent them out, it makes your payment. The other side of the coin is, being a really great and affordable rental solution for those companies who have higher demand. COVID really exacerbated that, right? I mean, think about it. You had some industries that were just non-essential. And you had other industries that were very essential. And so I think we saw some really phenomenal growth in the last 2 quarters in that particular product. So excited about that. E-commerce, where would it be if I didn't mention e-commerce? We've really taken off on that. We opened up 3 areas across the U.S. to be able to do the fulfillment. Again, I think we just timed it really well. We had launched all of that capability well before COVID, but clearly the need for that capability is increasing and growing. So again, putting the focus on those particular areas we did strategically as a company really have now started to pay off in spades with the investments we've made, the things we've started on our own. And the venture capital fund is really just designed to help us continue that momentum. And add to those capabilities, enhance it, and then look for new things that may yield even greater opportunity.
So, it is, and I appreciate you mentioning, the environment that we're in. None of these talks, happen today without talking about COVID. So, but it seems as if the momentum has been terrific. There's going to be parts of today's virtual summit that we're going to hear from venture folks that are going to talk about how, at a certain time of, this year earlier, that the deal making really came to a halt, and that we're now starting to see the accordion to start to come out a little bit. But where you had positioned these initial opportunities seems to have really not been impacted negatively. And heck, in an e-commerce area may have actually thrived, and that's terrific. How do you see the market today, and what are you doing thinking forward from? And there will be a post-COVID time frame for what you're looking at going forward.
Yeah, well, I think we picked some areas that are just kind of on the really early innings of growth. So I think that's really good. As we look at electric vehicles and autonomous vehicles, which was the other area that I really didn't discuss a lot, we're really on the verge of just starting to understand what all of that is about and how it needs to evolve, through our industry and where it's headed. So, I know at some point growth will slow, as in all products and all lines of business. It just is a natural evolution, but I am pretty pleased with the ones that we've gotten into because I think they still have a long tail of growth and opportunity for the company. So I don't know. I'm going to stay bullish and remain optimistic on the growth of the particular areas that we've chosen to fund and invest in. I think I just see continued investment going into those particular areas because the growth is so significant.
I really appreciate the bullishness. I'm a glasses half full type of person, so I'm really glad to hear that. One of the, and it's terrific that we have the opportunity to chat about the Ryder Ventures and the fund. My expectation is this is going to get a few, no more than a few, many, many thousands of views. There are going to be companies that have respected Ryder and been aware of Ryder because of those, that significant amount of customers that you have. How does the journey then for those companies that might want to get into the ecosystem happen? How do they make themselves known to you?
Yeah, well, we actually have a website that they can actually go to. And my marketing team will kill me because I don't remember the exact words or the nomenclature for that. So we'll have to follow up with you on that one. But if you go to our website, you'll be able to find it pretty quickly. And companies can make application right there. It's kind of like a lead generation form. We have you tell us a little bit about yourself, your product, what you're trying to accomplish, and then we will begin to vet those and figure out, does it make sense for us to pursue this a little bit further. So we have a team back at the ranch who's going to be actively engaged in looking at all of those opportunities that are coming in. Responding, because I believe we need to respond in a very timely manner to anyone that contacts us to let them know whether we would be interested in learning more or not, and the reasons why. But we're looking forward to it. I mean, we did the launch of it the day before yesterday, and within a couple of hours, we already had 10 leads and opportunities that came to us, which 10 may sound small, but for us, it sounded big. It was like, wow, we had no idea this many people would really pay attention to a press release and submit things. But we're starting to see a lot of activity around it. And so I think that's goodness. That's exactly what we want.
That's great. And really, as I, saw the release and, thought about our chat, and being very familiar in the world of venture capital and the migration towards private equity, heck, that's what we're talking about today, going all the way from seed to private equity or into going public, and what that journey is like. Having a partner like Ryder is really an option that hasn't been available to a lot of folks in the past. I was lucky enough in my previous lives over at Transplace, working with a private equity company that really understood the space. And here at FreightWaves, we similarly have folks who understand the space. But that's not always the case. And I asked you earlier about it being a monetary thing. Well, it oftentimes is simply about the money. But if you get a strategic investor and counselor and advisor like a Ryder, that's really important. So let me get to the kind of the question: how do you understand and see where those companies can be enhanced by your best practices, and how do you keep those best practices fresh? How do you make sure that you're bringing the best of what you have to offer to these relationships?
Yeah, I think, it evolves as it goes along, clearly. But, our goal is really to, again, sort of have our structure of what we're looking for, right, in those areas that we've defined. Doesn't mean we won't go outside of those if something really unique comes up. But I think having a really solid footing on what Ryder wants to accomplish is really important. It becomes the yardstick by which we measure, the ideas that come in, the level of funding that we want to put out there and invest in. But I think from that, we will get the freshest and the best ideas in the particular categories that we really want to venture into. And, again, it helps us cast a wider net on all of those technologies and capabilities that we might not otherwise be privy to. And I think your point is really a good one, which is from a strategic standpoint. And I know we said this earlier, but it shouldn't be lost. We do have 87 years worth of operational experience in this industry. And we have a large customer base. We have 3 business divisions, all with multifaceted capabilities. So I think partnering with a company like Ryder could actually really give startups some great exposure to test the technology, prove it out, and ultimately create the value that they're trying to create with what they're doing. So we're excited about it.
That's wonderful. So anytime soon, I'll be seeing you on the left or right of Mark Cuban and Mr. Wonderful and the folks at Shark Tank. I mean, is this the next step for Karen Jones in the career, or what are we thinking about?
Goodness, I don't know if that's the case. I think I'll leave that to the celebrities. But I think from a business perspective, certainly I'm excited about what this could actually bring to the company. I think our company is excited about it. I know my boss is excited about it, our CEO. And, I think it just makes smart sense for those of us in the world of transportation logistics. If you don't have your eyes open today to what's going on out there, chances are you won't be around for very long. So anyway, we're excited about it. Thank you so much for having me and letting us talk about what we're trying to accomplish here.
Much appreciated. And as I wrap it up, I'll just say, I like to make sure that when we level set, we talk about people and say what their titles are. But, as the Chief Marketing Officer, Executive Vice President, and Head of New Product Innovation, this is innovative stuff. It is bringing an 87-year legacy and capability to folks out there who are looking for that kind of counsel, guidance, and monetary beneficial benefit. This is really great stuff. So, Karen Jones, thank you for doing this. Really exciting stuff. And I hope that everybody really enjoys the rest of our Freight Tech Venture Virtual Summit. Be well.
Great. Thank you, George.